is very pleased to be joined once again by Scott Victor, a founding partner and managing director of SSG Capital Advisors. Scott, always nice to have you on M&A.
Good to have you. Thanks for having me.
Tell us a little bit about your company and what you do specifically.
Sure. We're a boutique investment bank, just doing special situation transactions, mostly M&A, some capital raise, and some balance sheet restructurings. We're based outside of Philadelphia with an office in New York, and we've been doing this since 2001 when we started the firm.
And you haven't run out of business yet.
Haven't run out of business yet. It's good.
So speaking of that, in this climate of distressed investing, where are the opportunities and what do you see for the rest of 2016? Do you see more opportunities?
Well, distressed investors have not had great opportunities the last few years because there's a lot of capital in the market and a lot of companies are being restructured, refinanced if they have a reason to live and they have enough liquidity to get through the tough times. So distressed investors have been looking for opportunities for a long time. Those that are international and have an international footprint, certainly Brazil is a tremendous opportunity now. Brazil's in a recession. The automotive industry is in severe crisis in Brazil, so very similar to what happened in the United States in 2008 and 2009 with all the auto suppliers in distress and trouble because the auto business in the U.S. declined to about 8 million units. That's going on now in Brazil. So those firms that have an international footprint and are looking for international distressed opportunities, Brazil's probably the best place to go. In the United States, domestically, there's obviously a lot of opportunities in oil and gas, but with oil prices continuing to drop, nobody knows when the knife is going to stop falling. So a lot of players have been staying out of oil and gas to wait until the market stabilizes.
What about the middle market trends that you've seen?
Middle market, that's where we live every day, in the mid to lower middle market, and there's still a lot of liquidity from senior lenders. The business development companies that are public companies, they're trading below par, so there's going to be some tightening of credit in the middle market, which is different than it's been the past several years where there's just been so much liquidity. So I think leverage multiples will come down in the middle market. I believe that exit multiples for healthy companies that are undergoing a healthy sale transaction, I think some of those exit multiples will come down from the lofty levels that they've been the past few years. But the middle market is relatively strong in the United States.
As far as Chapter 11 filings go, of course, there was a downtrend since the recession. 2015, we saw, I think it was 10% across the board.
Yeah, it's been going down every year.
Yeah, do you think that will continue?
It will continue. Larger cases have the liquidity to file Chapter 11, but in many smaller companies that are having trouble, the senior lender is calling the shots, and Chapter 11 is very expensive. So if a transaction has to be done through a Chapter 11, a 363 sale, for instance, which is just selling a company through a bankruptcy, that will continue. But if a transaction can get done outside of bankruptcy, it costs less, and that's where the lenders will continue to push.
Well, what about with the Chapter 11 reform that Congress is looking at right now? How do you think that might change the game or change the number of filings, that sort of thing?
The ABI Commission for the reform of Chapter 11 came up with really great proposals, but it's not in front of Congress yet. Congress has so many other issues to deal with that I don't think bankruptcy reform is going to come to the forefront for a few more years.
Okay, well, thank you so much for joining with us today. It's always good to talk to you.
Pleasure. Thanks.